Good evening, everyone. Hope you guys are doing well for this week. I'm Junlong. Welcome back to the weekly free financial courses. And you can call me Jay or you can call me Xiaohe 老师. It's all up to you. And still, this class, I'm not going to sell you any other courses, and I will not collect any personal information or money from you. This is 100% free, so that I hope you enjoy and hopefully we can become a financial expert and make some great money together. Today, we finally move over from the boring and tiring and complicated theory beginner classes and move toward to a more practical classes. I will try to get you all prepared slowly instead of rushing into the market immediately. As the more knowledge you have, the easier for you to make money in the market. Get rich fast is possible, but it is very difficult. And I need you to be both mentally prepared and filled with knowledge. And of course, in the other way, accumulating wealth in a slower manner will be easier compared to that. But I believe that most of you do have the passions and love to make a huge money in just a shorter time period and have the urge to do so, just like I did. So if you think the exact same way like I did, I will be happy if you can join and follow me all the way to achieve a financial freedom state. So let's start on today's topic. The topic will be analysis focus and options supported, which is in this class, we are not focusing on options, but we are focusing on the underlying asset on behind. Option is just a supporting tool to help us to limit our risks and use the leverage to multiply our gain. The main factor that decides either we will be able to make money or not is actually the price movement of the underlying asset. So we will be focused on how to analyze the stock, which direction has a higher probability that it will move. Either it's go up or come down. So we'll be focused on how to analyze the stock as a main, and then we will use the options as a supporting tool for the entry and exit, just to leverage our gain. Okay, so in tonight, we will explore the main way of how the investor and the traders analyze the market. So the question will be, how do we analyze the stock? In the world of trading and investing, there are many ways to approach to the market. Some traders and investors like Warren Buffett, they base their decisions on fundamental analysis, which is they read the financial report and understand the business fundamental. They will do tons of readings and calculations just to find out how exactly the target company is doing, how is the current financial situations. And many of them will have their own way of identifying the value of the target company worth. So they will find out the best company among all of those, and then they will have their own method of evaluations of how much the share price should worth. Although this was the mainstream in the previous decade, but nowadays, teenage doesn't have that kind of patience to read through all the numbers and words. It's very troublesome, and you need to draw the resources online, and then you need to read it one by one, read the past historical report for a few years, just to understand how the company is doing. So, and they also doesn't have the patience to hold and grow alongside together with the company. So the next mainstream of analyzing method is slowly taking place, which is technical analysis. They believe that everything is already reflected on the pricing, and they can read the history of the company just from the chart itself. Like example, if it's uptrend, it means that in the past few years, the company is doing great. So I don't need to just read through all the number to know that how many they are making. I already know that they are a profit company just from the chart itself. So that so that they actually just focus solely on the price chart and the patterns to predict the market movement. So that they actually don't know what the company are going to do next, but they can just read through the chart, the indicators and the patterns, that then they will know that which is the direction that the price is high likely going to be in the futures. After that, this is the two mainstream, and the third one will be the news trader, or maybe you can call it news gambler if the knowledge behind is insufficient. And this is a method to capitalize the key event like the Fed announcement, the FED announcement, or some major product launch. Like, for example, when Apple is going to launch a new product, many people will bet on the price to be rise before the news. So this is one of the methods that they actually bet on it. And usually this kind is a very short-term trade focus type, and usually trade just for a few minutes in and out, maximum just within a day. And they can just make a huge lot of money from holding the stock just in a few seconds or a few minutes, which is very exciting method. And there's also a type which is called the market sentiment type. This is the way that, as we all know, that majority of the investor and trader lost their money to the market. So if you can know that the market, what is the majority is doing, and then you can take the opposite approach, then it might be a smart way to become a minority that make the money in the market. So you can just there's a way to do it. You can just know that the market bias, and then you can just do the opposite. Instead of become the majority that is losing money, you can become the minority that is making a life fortunes in the market. And at last, there will be a type who is purely relying on luck. Thinks that gambling is actually a 50-50 gamble game. 50% either go up, 50% either go down. So it's just a bet on the casino, either up or down. So if you think that you are the chosen one, the luck is by your side, you can actually just go to the market with zero preparations and you just place a bet and then wait for the money to come to you. Easy as that. But this is very difficult for me because I'm not the person who have luck. So in these sessions, I will bring you throughout all the different methods, but we will not go into the detail due to the time constraint. But I believe that all of you will be able to get to know what kind of analysis method that suit you the most, and stay tuned for the upcoming courses that will go into the detail. And then in these sessions, we also will cover how to use options to leverage and enhance the return within this framework. We will see how option trading fit into each of these methods. So now let's get into fundamental analysis first. So let's switch our mind to think like a Warren Buffett. Fundamental analysis is actually all about understanding the intrinsic value of a company. The idea is to look at the financial health of the company, its business model, and the competitive edge. So if a fundamental is strong, the company should perform well over time. However, the time is limited today, so I'll just show you a rough outline of how to conduct a fundamental analysis. And we might have a series of another courses which will go into the detail, and we will study all the company together if you're interested. And then we can just maybe play some trades based on it. Okay, so this will be the rough outline of how to conduct a fundamental analysis. To conduct a fundamental analysis, we can separate it into two major parts. The first is to find the great company. We are not looking for a good company. We want something better. Something that can let us outperform the market. We don't want to be a normal. We don't want to be great. We want to be better, other than good company. So we need to set our requirement, our own criteria, so that we can filter the best among all the stock available. And here comes the second major part after you find out the best company among it. The next question is, how much does it worth? How you evaluate the share price of the company and how does it compare to the current share price? What to do if it's higher and what to do if it's lower. But first of all, let's go through the first question first, which is how to find a great company. When it comes to looking for a great company, you may ask yourself the following questions and answer based on your understanding on the company. The first question, what makes it special? When I mean special, I'm talking about the advantage when it comes to compare with the competitors. And we will go into the answer bit by bit, but let's go through all the questions first. The second question, how is it doing now? And then we will need to know, does it able to survive in the future? And how far can it go? And what will be the underlying risks? All of this question is actually focused on different aspects of the company. The first one will be economic mood of the company. To be short, it means that the advantage of the company, and then you will need to understand what the company do, what kind of product and services it provides, and in what region it operates. And does it have any competitive advantage in those? It can be a very long topic to discuss. So I will just give you some example to let you have a better understanding. One of it will be branding and cost efficient. People will prefer to buy goods from the company with good reputations. And then the company with a bigger scale will tend to have a lower cost as the quantity of their order is greatly higher than the usual company. Next example might be Apple. Apple advantage is actually called the switching cost. All the products are sharing the storage in iCloud. So when you try to switch to the other brand, you need to move all the things from the iCloud to the other device, which is a very tedious and troublesome thing to do so. It is very time consuming and it takes you effort. And this is what we call the switching cost if you quit from Apple product. So let's move on to the second question. The answer to the second question is profitability. Profitability, okay. This is to check on how the company is doing now. Either it is in profit or loss. And you can also check if the company have a history of consistent profit in the past few years. And is the profit level stable, increasing, or declining? If you are seeking for dividend paying stock, the stability is the key. Maybe just a stable profit level will be sufficient for you. But if you are looking for a growth in the share price and also in the company, you will want to see a significant profit growth. The next one to pay attention to will be the cash flow. The cash flow decides the chances of survival of the particular company. If you have no cash on hand, you will get stuck in many things, like paying payment to the suppliers, paying wages to the employees, and etc. So even if the company is show a profit in the numbers, but you need to make sure that they have cash on hand. You need to check on their cash flow, because some company might be tricky in just showing the number and then they do not collect the money for now. They're just showing the future profit in the figure now. Profit is just a accounting number, and some company will have a very complicated accounting method just to show their profit in a better way, but it doesn't represent that they have a cash on hand. So you will need to make sure that there is money actually flowing into the company. You also need to investigate whether the company have a solid cash management practice or not. So the next one, decide that how far a company can go is actually the efficiency. When I'm talking about efficiency, I'm talking about the efficiency of the company in using the resources. Is it able to generate a profit using the debt or the equity in a very efficient way? Let's say that a company take a loan. Is it able to generate enough profit to expand the business, or worst come to worst, just to pay back and cover the interest of the loan? As we all know that it's a very common practice for a company to take on a loan for the operation. So you need to know that after he take in the loan, is it able to use the loan in an efficient way, not just to pay back the loan and the interest, but able to make something more out of it, able to expand the business, acquire more customer, something like that. So we are talking about the efficiency in using the company resources. And also this will lead to the last question, which is the risk. When the company is taking a loan, a high debt can indicate a very high risk. So you want to check on how the company handle the liabilities. In short, we can check on how conservative the company are. We will need to check on the latest financial report to know the company financial health. Just to check on the latest will do, because the previous history number doesn't matter in these kind of cases. You just need to know either the company now is having a good financial health or not. So what will decide the measurements? I will say that it will be the ratio of the debt to the total equity. It might be a good measurement. So is the company able to survive on the future, or it is merely at the edge and hugely depend on the debt? This will be the focus that we can pay attention to. And there will be classes that go into the details of how to pick up a financial report free from online. Personally, I will do it from Morningstar. They can withdraw the financial report very easily, and then, but there might be some restriction on it. And after we withdraw the report, we will need to check on the numbers. And how do we check into the numbers? How to do the calculations? And how do we interpret the result? This will be a very long section if you want to go into detail. So if you are interested, do pay attention to our schedule, and I will try my best to schedule it as soon as possible. Now we already know that how to analyze the company, and we already analyzed tons of company, and you find out the diamonds in between, the company that scored a beautiful mark on all the above. Now we will just buy directly and wait for a few years? Of course, no. We will need to check on the price. We will need to decide if the stock price is reasonable or not. Who knows that we are buying at the sky high price level? We will need to do some mathematics to know that how much exactly the stock worth. There are various of evaluation methods, but I'm just going to categorize them into three main categories, which is asset play, dividend play, and also the growth play. All of those serve for different purposes. In the asset play, the company net asset value need to be high. So this is actually the most, I can say is the most smallest risk type of evaluation. So even the company go bankrupt now, you're able to share a piece of cake from the liquidations because the net asset value is high. Meanwhile, in the dividend play, you need to compare the dividend paid with a fixed deposit rate. And we will need to make the decision whether the current price worth on the dividend received or not. Is it a good return if we buy in now? Or we need to wait for a lower price to get in? And then in the growth play, you'll be expecting the company to expand quickly, and we are seeking for a very huge potential gain on the stock price. So we need to estimate the company growth rate and see if the current price a good undervalued stock or not. So let's get to a summary before we get into another analysis method, which is the technical analysis. Fundamental analysis actually takes time, and it is crucial if you want to make a long-term investment. We will compare with other analysis methods later on for you to have a better comparison and make your choice. The next analysis method will be technical analysis. Technical analysis actually is much more focused on the stock price and the pattern. The idea is that all the market information and the figures and the numbers is reflected on the share price. So by studying that on the chart, you can predict where the price will go. So before we go into the chart, we will need to choose a trading style that match your risk tolerance and your goal. For instance, the scalping and day trading type, if you are focusing on the minutes by minutes or the daily price movement. Else, we can be a swing trader, which is focused on the holding for several days to a few weeks. Or we can be a position trader, using the technical analysis for a long-term trend and hold the position for months. Just remember that the shorter the time frame you work on, you need to be more precise on the entry and exit, and the room for your mistake will be at the minimum. Okay, so all of those type of trader actually don't make any difference when it comes to the chart analysis. The difference in between is just that the time frame that they observe. Technical analysis method can be grouped into several categories. And each of them will be focusing on different aspects of the price movement. Here's an overview of some popular types. The first category will be the trend indicator. It is to identify the directions and the strength of the current price trend. The most popular indicator that fall into the trend indicator category will be moving average and MACD, which is called the moving average convergence and divergence. And moving average, especially the 50 days and the 200 days moving average, are among the most popular trend indicator for identifying the general market directions. The next category will be the momentum indicator. It measures the speed and the changes in the price movement. So you'll be able to identify the overbought and oversold condition. When it's in overbought, when it's in an overbought, you can just make a sell. Oversold, make a buy. And you may check on the RSI, the relative strength index, and the stochastic oscillator. This is widely preferred for timing entry and exit. So trend indicator for the directions, momentum indicator for the entry and exit. And then we will have the volume indicator. It will assess the rate at which the price of the security increase or decrease. The classic will be a Bollinger Band and ATR, average true range, and it usually help you to set the realistic stop loss and your take profit target. The next one will be support and resistance level, which usually find out by identifying the price level where the stock repeatedly find the bottom or top. The relevant items or analysis tools will be Fibonacci level or pivot point. And after that, we will have the pattern recognitions. We analyze the repeating patterns in the chart that may indicate a potential price movement. Recognize the pattern like double top, double bottom, or a symmetric triangle, flag, something like that, the head and shoulders. Will help you to predict the potential breakout or reversal. And the next one will be market sentimental indicator, which help us to identify the overall mood or the emotions of the majority of the investor. We can check on the put and call ratio, the fear and greed index, and also the VIX, the volatility index. This sentiment indicator can be especially useful during the extreme market conditions. So if you know that the market is in a extreme fear condition, you may take the opposite direction to buy in. It might be a good timing. So it helps you to understand whether the market is becoming over optimistic or pessimistic. The last indicator will be the cycle indicator, which will be a more advanced indicator but with a lower preference. It identifies the repeating cycles in the stock price due to the seasonal trend. The economic cycles or some company-specific patterns, like the alcohol company usually have a rise in the stock price when it comes to New Year's. Many people bought it, okay? So although it is a more complicated and complex method, and it is less commonly used, the cycle indicator can be a very powerful tool for a long-term market timing. Okay, so there are many type of indicators that fall into this category. And even though we go through so many indicators category, I would just suggest for us, the beginner, can just focus on mastering a few high preference indicator, as I believe that there must be a reason why these indicators are ranking higher order in the popularity. Market prefer it, there must be a reason. So we can just focus on a few to figure out ourselves. The first one I would suggest is moving average, a simple yet powerful one to identify the trend. The second will be RSI, the relative strength index. It is very great in spotting the overbought and oversold condition. The third one, support and resistance, which is the fundamental to understand the price level. The upcoming will be MACD, the moving average, convergence and divergence. This is very effective in trend and momentum analysis, and it is good to identify a reversal signal. Next, the volume. A great amount of volume can be a very great signal for trend confirmations. And the last one will be Bollinger Band. This is very useful for identifying the volatility for potential price breakout. These 6 indicators will form you a very solid foundation. Once comfortable, you can explore more advanced and specialized indicators like Fibonacci retracement, Fibonacci extension, ATR, or even Elliott wave theory to refine your approach. But believe me, these 6 are more than enough. You might not require to learn all of those. Usually, you combine 2 or 3 indicators will be very good for your confirmation. More doesn't mean better, okay? You just need to practice on the historical data to gain the confidence in using those indicators. And then keep track on your trades and adjust based on the performance data. So the last analysis method that we are going to discuss for today will be news trading. Trading stock and option based on news is a very powerful approach that it will leverage the market reaction to a specific event. And this is how you start to trade a news. The first one, identifying your news sources. A reliable news sources can be crucial for timely and accurate information. The common sources will be include Bloomberg, CNBC, and maybe some newspaper. And then afterward, you need to set up a news alert for some specific stock. Maybe a Google alert for on the trading view to just keep you updated in real time. The second will be selecting a news trading strategy. It can be a pre-event strategy, which you participate the price movement ahead of the scheduled event. Or it can be a post-event strategy, which you wait for the news to release and then you react to the price changes after it. There's pros and cons. The first one, you can just enjoy the ride of the news release. The second one, it will be much safer in the way, I would say. Okay, so the third step will be choosing the stock or the options that react strongly to news. You need to focus on the stock or the sectors that know to have a very sharp movement based on some specific news type, such as technology stock for the product launches like Apple, or some pharmacy stock based on the FDA approval. And you need to look for the stock with a very high implied volatility so that it is more likely to move significantly alongside with the news. Now, this is the 3 steps for news trading, and we will move on to the key elements to pay attention to. Wait a second, yeah? Okay, so the first element to pay attention to is the type of news. Either it is a scheduled news or like the earning report, the CPI, the GDP, non-farm, all those are already a scheduled event so that you can know before it releases. The second type will be unscheduled news, like merge and acquisitions, or maybe some regulatory changes and some legal outcome of some complaints. Yeah, something similar like that. And then the second element you pay attention to will be the market sentiment. Understand the market sentiment is crucial in news trading. The news can trigger the traders' reactions, and analyzing the sentiment will help you to identify whether the the majority are looking at the market in a positive way or a negative way. So the sentimental indicator like VIX, the volatility index, can signal the general market fears. So it will influencing how strongly the stock react to the news. The third element I would say will be the price action and the volume. Monitor the price movement and the trading volume closely before and after the news event. A high volume will actually become a confirmation of the strength to the price movement. For options, you can observe the changes in the implied volatility. It usually increases before any big move. And the fourth element to pay attention to will be the expected versus the actual outcome. For a scheduled event, the market often price in the expectation ahead of time. So when the actual news is different from the expectation, it will lead to a rapid price movement, either a spike or drop. Okay. So example, if a company earnings is far exceeded the expectation, the stock price will be spiked higher. But if the earning miss the expectation, it might lead to a very sharp sell-off. So there are many types of news that we can trade on. The first one will be earning reports. The second, economic data release. The third one, the central bank announcement. Fourth, product launches and innovation. The last one, merge and acquisitions. You can set the alert on this event to participate on a crazy movement that it can lead to. There are tons of details to be discussed for using the options in news trading. Actually, options and news, these two are quite a perfect match. Many people come to the option market for the crazy high return, and news can actually make that happen. Can make your return become realistic. And we can even go into the details of the step of executing a news-based trade, just like the pre-trade analysis, the checking and filtering, and the event monitoring, and the post-news reactions, and even the exit strategy. But we are not going to expand this topic anymore, since this is still a beginner classes. And even though there might be a class for news trading, but it will be a very short series, I think, because it's less likely to be discussed and it is very risky compared to the others. So trading the option based on the fundamental, technical, and also news analysis will offer you a multi-phase approach to taking advantage of the various market opportunity. Now I will talk on how to implement each of these strategy, just especially for option trading. Since that fundamental analysis focus on intrinsic value of the company. Okay. The fundamental will be focusing on the intrinsic value of the company, and it assess the financial health, the growth prospect, and the industry positions. So with options, this method is usually useful for the long-term directional trade or hedging strategy. After you analyze the stock financial reports, such as the revenue, the profit margin, the cash flow, and the debt level, found that the company is have a very strong fundamental, you can just choose to buy a long-term call option, the leads, with the expiration date more than 6 months, more than half years, so that you can have the room for the price to react to the strong fundamental to growth. And the valuation of the company can help you better in deciding what will be the strike price of the option that you should trade on. And in the reverse way, the company with a very weak fundamental, we can just buy the put with a very similar time frame to expect that the company share price actually drop due to the weak fundamental situations. And the next one, technical. Technical analysis actually focus on the price movement, the trend, and the volume. So this will be very useful for the short and medium term option trading. This approach will be ideal for swing traders, day traders, and targeting on some specific price movement just within that period. And you can use the chart pattern, the indicators, and also some price action to determine the potential direction that the price are going to head. So, for example, a breakout strategy. If a stock price break above a resistance, you can just buy a short-term long call options to profit from the momentum. And if the stock price reach an overbought RSI level, you can just buy a put expecting that there will be a retracement or a downward reversal. Or you can do it in a lower risk approach, which is the bull call spread or the bear call spread, so that you can take part in the trade while limit your maximum losses and reduce the cost required. For the news trading will leverage the market reaction to the event, such as earning, announcement, economic reports, and product launches. This is very effective for a short-term option trader just to participate in the volatilities. One of the example will be the earning report spreader. Suppose a company is going to announce for their earning, and you expect that there will be a very large price movement, but you are unsure about which direction that the price are going to head off, so that you can just buy a straddle, which means you buy a call and you buy a put together. So no matter which direction that it is heading to, you will be profit in one side, and then you will lose on the other side. Just that usually this kind of significant move will let your profit greatly higher than the losses, and it will cover the losses and leave you in a net positive earning stage. So even though these different analysis methods have their own pros and cons, many people will actually use a blend of these three approaches to create a robust trading strategy. You can just combine one or two or just three together. And this will be the example that I will show you. First one, you use the fundamental analysis to identify what will be the strong fundamentals company. For this case, after I read through the financial report, I think that Apple is a very strong company with a solid earning growth. So I have done the fundamental analysis. I go to the chart. I wait for a technical setup. First, it needs to stand above the 200 MA so that I make sure that this company with a strong background is on an uprising trend. And then I can just wait for a signal to get in, maybe on the support level or RSI below 30. Or I can just combine together with the news. I wait for the earning or the product launching news so that I can just buy a bull call spread or I can just buy a single leg call to earn from this strong fundamental stock. So after you combine all of those, if the stock price really move as you expected, you can just close the trade after the earning to lock on the gain, especially when the implied volatility decrease, which will lower the option premium afterwards. The implied volatility increase before the news and drop after the news. Usually do it that way. Okay. So there will be pros and cons for every method of analysis. For fundamental analysis, this is a aim for the long-term directional trades. The fundamental analysis is effective for long-term options as it provides a solid basis for the stock value. But you might need to look for an option with a longer expiration date, just to wait for the price to have enough time to react to the financial status. But fundamental analysis is less effective for short-term trades, as the fundamental usually take time to affect the stock price. So you actually know that which direction that this company will be heading to after a longer period, like few years or even more, but you are unsure about the rise and drop in between. The next one, technical analysis. Technical analysis is famous for the timing entry and exit point. Technical analysis is excellent for short-term trades. And the patterns, the chart patterns and the indicator can actually give you a very precise entry and exit point. But it will be less effective in a volatile and news-driven market, as the price pattern may not hold because the news can easily destroy any support or resistance zone actually. The last one, news trading. News trading is actually a very effective way for a short-term, high frequency, high volatility options players. Okay, so you can just make money, a very great amount of money within a minute. But the cons will be the news events are actually unpredictable, and the strategy might be very costly. Just like the example I gave you previously, you buy a call and you buy a put together, so that no matter which direction it's heading to, you'll make profit. But buying two options together will cost you a lot of money. And if the price movement is not significant, you might end up losing money instead. And here comes the end of this webinar. We already talked about the fundamental analysis, technical analysis, and also the news trader type. So this is the three main analysis method that we'll be using, and how we apply the options as a supporting tool for entry. For fundamental, you're focusing on the long term, so you can just buy a lead. Options with a longer expiration date to just enjoy the ride, but in a longer period. And it is, I will say the risk will be the smallest among all of those. And technical is the most favorite type. And you can just use the debit spread options to just enjoy the ride with a limited risk. And you can do a quite high frequency trading by using a technical analysis. But for news trading, normally people do it in a strategy way, which they buy a put and they buy a call together. So no matter which direction it's heading to, you will make profit. But there are some special case like the Apple product launch. This is actually a good news. So people will might just buy a single leg call instead. They don't need to bet on the price will drop. It's just that how high the price can lead to will be an uncertainty. So here comes the end of this webinar, and we might have classes for each of those analysis methods. Like for fundamental, we can go into the details on how to read the numbers, how to do the calculation, and how do we interpret the result. And then we can have a scoring method by ourselves to identify, is this a company, a good company or not? How much this company score in between 0 to 10. And then we can make our decisions whether are we looking for a growth type of company, and then is it an undervalued company, or we need to, if this is an undervalued company, we can just buy the call option instead. With the strike price, just put on the valuation pricing. And we maybe can have another classes to go into the details of how to read the chart. How do we utilize all of those technical analysis methods, the trend, the momentum, and maybe we can just place a trade together after we read through all the chart pattern and we identify a very good position entry. But for news, I personally is not a big fan of news trading because it's I don't like the feeling of getting to know the result just within a few minutes. So let's see how it goes, okay? So if anyone would like to contact me in person, feel free to scan this QR code and you can just say hi to me. I'll be very happy to assist you. And I'm open to talk on any topic, not just about options or analysis. If there's any topic that you are interested, you can also raise to me, and then I will prepare you a sessions to talk on your desired topic. We will arrange the topic into the schedule. So at the end of these sessions, I will recommend you to use the Use Smart because there is many benefits now if you open an account and then make your deposit. You can even earn some Tesla share if you open an account. And if you deposit more than that, you can get even more cash voucher. And there will be a QR code for you to just register an account. You can do so if you would like to start your journey on the stock trading or the options trading. So there will be 5 minutes remaining for the sessions. If there's any question that you would like to raise, you can raise it here. Else we will just end this webinar earlier. Okay. This is the QR for account registrations. And this is the QR to contact me in person. Feel free to chat to me. We can talk on everything. How to read the MACD? This is a very interesting question because normally people do it by reading the golden cross and the dead cross to identify the directions. But actually, there is a better way to do it so by reading the length of the histogram to just identify the earlier entry and exit, or we can do it by identifying the convergence and divergence. Stay here and I will prepare a session for technical analysis and we can go to the chart together, and then we can just read the chart together, and I will show you some the famous type of indicator and how to read them. I'm actually a big fan of technical analysis too, because the fundamental analysis actually take a lot of time in reading all those financial reports. And some more, I'm even a funded trader before, just to trade on gold. But I lost my funded account quite rapidly, just after 3 withdrawals. But it's okay since I already covered the cost and make some profit. If you trade Forex or commodities before, you will know that there's a thing that called prop firm trading. And prop firm trading is actually a method that help you to gain access to a bigger size of funds, so that you can just, if you have the skill, you can get as bigger fund as you like, and then you can just make a profit sharing with the company. I hope it can solve your questions. And if there's no more questions, we will going to end this session right away. Let's say if you would like to know how to read the MACD, I hope I already answered you, not just focusing on the line, but the histogram too, and also the potential reversal signal by reading the divergence signals. The height between the height difference between the length of the wave. So seems like there is no more questions. We will end the sessions right away. And then thanks for your joining. And then, yeah. I will just show at last, I will just show the disclaimer to avoid any unnecessary arguments. Okay, thanks for joining, and then hope to see you guys in the next classes. Thank you.